Amir,
Habibi, Chris.
we've been wanting to have this conversation for quite some time.
Yeah.
For reasons out of our control and just life in general being super busy, we finally made it happen now. And I'm really excited to have you here because we have so much to talk about because everything has changed on every
Yeah.
level. First of all, congratulations on COTU Ventures.
Yeah. Thanks, man.
It's really exciting. I would love for you to just tell us what COTU Ventures is first, and then after that, I have so many questions.
Yeah.
Really curious if you could just introduce it for us.
Yeah. Well, first, dude, thanks for having me. I know it's been hard to schedule, so I appreciate the patience and excited to be here. But where do I start? I mean, COTU, right? So the inspiration behind it, COTU stands for Champions of the Underdog.
Yeah.
And the idea is that, I personally, in my journey as an investor, realized that I love being really early in the journey. And that's generally where a founder is up against the most challenging experiences. So they're the most loneliest. It's the loneliest part of the journey. It's the time where really you can really make a massive influence on their chance of success. And you're really backing the person. So that's the philosophy behind it. And it comes from me seeing a coach years ago, learning about my values as a human. And then through my values or the discovery of my values and testing those values, I realized that this is something that I really buy into and I really believe in. And it's like more of a mission than anything else.
Cool. And why is coaching so important for you when it comes to investing? I mean, on the surface, investing is betting on a horse, let's say, but not necessarily training the horse or coaching the horse. So why has that become part of your ethos?
Well, dude, I mean, honestly, I feel like I don't want to get, I can get philosophical. I'm trying to be a bit more tangible in how I explain this, but like, I think every human needs someone in their lives to be that sounding board in helping them think through critical decisions, helping them understand or reflect on certain things they've done. And I think that's really undervalued, but it's really transformational if the person is in there with the right intention, right? And I think, so I've been seeing a coach for years, and I find so much value in that. And so I think founders, unfortunately, for the decade of this ecosystem being alive, haven't had much of that experience. And now with a lot more founders that have come up and been successful, there's that kind of exchange, but they don't even have that regular cadence or have the availability to give. So as a VC, I see that as a highly important role we can play, especially in the early parts of the journey where they have so many more questions to answer, right?
And in your, I mean, obviously, yeah, in your decade of being in the space, I mean, you're one of the kind of early players in the space in the market. Throughout that time, founders have vocalized that? Like you notice that gap? Is that something that's commonly kind of across the different accounts and different brands? Is that something that was so apparent?
So I'll tell you, it's a great question. I don't think it wasn't vocalized, I need a coach. I think people are now coming to terms with it. Before, in the past, we had a couple of people we used to use when I was at Beko that were experts or coaches from the Valley and stuff, and we'd connect them to founders. And it had mixed results. I don't think you can force a coach onto anybody. I think it has to be a mutually, let's say, mutual decision that both people have to really see the value. But I think for me, what was apparent is that, it is like most of the investors, not to generalize, but I don't really enjoy spending time at that early journey where it's a lot of uncertainty, right? And so founders are kind of, what's apparent is that they're kind of alone in that part of the process, and they have to kind of be resourceful and hustle on their own. And it's really the hardest part. Once you get traction and you get to PMF, product market fit, investors, then make it's easier to decide on whether to invest. They have a lot more evidence to look at, right? So founders then have more support infrastructure, bigger teams, and other things that make this an easier part. And I know that coaches are only meant for the earliest part, but I think that it's the most meaningful one. And that's something I saw like with my exchanges with founders, even when I didn't invest, when I would give them feedback and try and give them like, perspectives, they generally really appreciate it, right? And then they come back to ask for more. And that exchange is when I saw really there's this lack. Even though they have investors in their cap table, they don't necessarily have that same connection. And I think it also boils down to having trust and really building trust with the founders.
And so I completely agree with you. I don't negate the fact that that's a big problem. But I wonder as an investor, like when you're looking at opportunities, when you're looking at like your deal flow or all the startups that you might be evaluating, does it become a measure in the sense that like, founder X and founder Y, both have phenomenal opportunities. They've really, have a great kind of, view of what they want to build, what market they want to operate in, how they're going to build their product, etc. But maybe they might be different in terms of soft skills, interpersonal skills, confidence, problem solving, all the issues that coaching might help. Does it become a measure of your evaluation? Like, or do you assume that, irrespective of who they are as human beings and what gaps they might have in whatever those soft skills or human skills are, I will fill in that gap, and that's the difference of COTU, right? Does it become something that you measure?
Man, this is an interesting question. So I think everyone's different.
Yeah.
Every single founder you meet is different. I don't think it's a formula or like a playbook
Sure.
that we have, but I think when we spend time, so we spend time with these founders trying to test out or ask them questions to try and understand where they are in their journey, both their self, because I think entrepreneurship is really a self-discovery journey, and it's the aware founder has an edge over the ones that are like more driven by external, let's say, achievements, the ones who are really reflecting on their journey and stuff like that. So for me, I spend a lot of time understanding how much depth they have in their business through Q&A, and I also spend time looking at how much clarity they have and how they respond to some of my questions, because I feel like those are two things that come from experience in the testing and really trying a few things. So those are some consistent things that I look for. The rest is, other, like, are they coachable? I think coachability comes from how they receive feedback.
Yeah.
Are they defensive? Because if they're defensive, it's very hard to connect. Or are they open and curious? And so that, and we try and understand their domain expertise, like how intimate are they, or how close are they to the problem that they're trying to solve? We try and think of how, if they're able to build a team around them, that means they're good at selling the story. And that doesn't mean that we only look at those things. Those are like added value.
Sure.
In sort of deciding on who to back. But it's a good question, because when I came up with COTU, people used to ask me, "Oh, what's an underdog? Is an underdog like a founder in Syria who's struggling, or a founder in Lebanon now?" And I define it as, actually, it's anywhere, but it's someone who has a ton of potential, like just high potential person who is generally lacks self-belief, right? Most people are insecure at these stages. And so my job is to help them build their confidence, build their belief by asking questions, by helping fill in gaps, not permanently, but like coaching them through these gaps. Like, okay, how do I do better at dealing with hiring new C-level executives, especially when you're a solo founder trying to build a C-level team. People make mistakes, and it's sort of, you want to encourage them to grow. And so that's if I had to say like the gap we look at, and I'm kind of going on a tangent, but I don't know.
No, I can't help but I read somewhere, I think it was probably on your website, but you also said something along the lines of believing in people who were the least expected to succeed.
Yeah, against odds of success, but I'm changing that to who don't believe in themselves as much, right? And I think, I mean, it can manifest. I have this other sort of hypothesis that I've believing in more and more is that our insecurities are our biggest competitive advantage, right? And so for me, like I grew up in an environment. I'm a middle of three boys, and I grew up in an environment where my older brother's a year older than me, and so we would be compared a lot, and I would always have this thing where I'm never good enough because I'd always, not meet his standards, which are always a bit ahead of mine, right? And then the other thing was, as a middle, you kind of have not much attention put on you, so you don't get much attention in growing up and stuff.
Yeah.
And so I had that insecurity comes into play in this business for me, where I give a lot more attention because I wasn't given it as a kid. So I give much more than the average investor, just because it's something that
your character was developed that way.
Exactly. I've been conditioned with. And then the not good enough trade for me means that I actually put so much effort in that process. So those two combinations make me suited to this earliest stage, because that's where they need the most attention, right? Less so when it's growing and teams are there, you're hundreds of people, and now it's okay, how do I optimize for valuation, for upside? Mine is much more, how do I optimize for the person, because I want to give them all the attention that I think they need. And typically most people need that. They just can't find people that really care for them.
That's super interesting. And I'm trying really hard not to get philosophical, but it kind of sounds like you're investing in people you associate to.
Well, I think for me, it's like everyone's different. So where I find the connection is in values. So it's not necessarily I think everything is about connection. Every human being, I think connection is like a human need in life, right? So I have to connect with every founder I invest in, for sure. And I can connect on many different ways. So many things.
But it's funny, like I'm a middle child too. My sister was, and still is, probably the kind of inspiration, right? Like she's just phenomenal. She's super accomplished, disciplined, loving, warm, super kind-hearted. Like she's amazing. And I always felt like I didn't get the attention. I think a little bit like you, right? Like as a middle child, I was always trying to be or compared to her, right? And I think me too. Like I put a lot of emphasis on making sure that everyone around me, my network, people I care about, feel that I care about them and I give them attention, right? So it's almost like what I always yearned for, I'm giving, and it sounds like
more than people who the average, more than the average.
Absolutely. And I think I really think that's one of my strengths too. So as you said, my weakness now became my strength, right? And it's interesting because you've kind of weaved that into your ethos a little bit, right? It's like there are founders every day. There's people starting companies, trying to solve problems every day. And me too, on a relationship level, when I meet a founder or a startupper who I see, or I kind of associate the feeling of what they're going through, and I can see the struggle a little bit, but I see the opportunity and I believe in their capabilities. Me too, I get super, super excited. I'm not an investor, but I get super interested in that as well. And I absolutely want to help any way I can. Mm-hmm. And it sounds like you found a way to take your personal values, your personal experience, and build, a business out of it, which is honestly like probably the best way to live your life, where your ethos and your values are what you do for a living. That's amazing.
Yeah.
It's just really interesting because I think the first time you and me met was when you guys had invested in Kareem and early on in the journey. And I remember coming to your old offices and meeting the whole team. And I mean, that's a success story in itself. But back then, the VC space was quite limited. There wasn't that much, there weren't that many players. Today, it's unrecognizable, right? It's like there's so many VCs, there's so many angels, there's so much, I would say, optimism and money in the market. Like we're living in like a renaissance of the Middle East. And I think it's super exciting. Even this morning I tweeted out, and I think Steve saw it. I'm like, man, when you look around you today as a region, we need to be super proud. Together, what everyone's done together in terms of an ecosystem from Egypt to Saudi to the UAE, etc. It's just unrecognizable. Fundamentally, though, at the end of the day, there is this feeling, and I've had this conversation with a few investors, that the underdog in these markets generally don't get a chance. And it's not a level playing field. It feels like there are certain kind of rules to the game that have, given some privileges to some and not others. And I've seen it. I've felt it. I've startup clients who even tell me about it. Their journey is more difficult than others, for example, based on multiple factors. And I don't think we need to dig into them. But hearing you speak and saying, COTU and championing the underdog is filling a vacuum. What I wonder is how. I mean, your fund is, you're hoping to have a fund that makes 20 to 25 investments a year, right? Or for fund, the fund itself will make 20 to 25 investments. Seems to me like you're just scratching the surface of this problem, and there needs to be, 10 COTU Ventures. Just because it just feels like the opportunity or the access to this capital, the access to this opportunity for the underdog personality, unfortunately, isn't there. What's the ambition for COTU? Like, where do you want to take this? Like, how do you scale something so difficult to crack?
Yeah.
Because it's a human thing. Like, there has to be 10 Amirs to do it. You can't institutionalize it, and how do you do that? How do you see
You
that
can't,
unfolding?
but culture spreads, right? So, when founders don't know what exists out there until they experience it. So, not to say that we're a different style. Everyone else is different. But what gives me conviction is when I spend time with a founder, the reaction is generally quite positive, and they then see what they can have with an investor in that relationship, right? It's not necessarily the underdog. I don't want to confuse the ones that have not been looked at by investors as the ones that we look at.
Sure,
Right?
sure.
We look at the same types of opportunities, but I think it's the stage and the founder journey at that particular stage that's against a lot. That's hard to succeed. But like I said, so culture spreads, meaning that for us, our mission by being the first check in these companies means we set a standard for other investors who come in to kind of follow, right? We don't let bullying, we don't create power dynamics, no agendas, no behind the back conversations, right? We try and set those standards, and then over time it spreads because investors, if they want to enter into the best opportunities, which hopefully we've invested in early enough before they become the best opportunities, before FOMO creeps in, they kind of have to follow.
So COTU will become a culture catalyst for VCs.
That's the mission.
Hopefully.
That's the mission. If we can, and if you look at like the best VCs in the US, that's the Sequoias operate that way. You ask any founder, most of the founders that they backed, it's generally they get a certain type of standard, like a really that they just love, experiencing. And I think for us, we've moved from an investor-led ecosystem, it's quite obvious now, to an founder-led one. And I think investors, you either have, it's not like you have to be authentic. You can't just fake it in that process. So I think founders are seeing through a lot of the stuff, especially second-time founders, that they know what they want now with investors. And, over time it'll compound, but it takes from a small base to get there, right? It's like.
Absolutely. Are you finding founders like open to kind of your proposition in terms of how you approach things? Are founders generally open to that type of relationship, or are they very like,
yeah, man,
yeah?
If it's authentic, they are, yeah. If they know that this is, so I start most of my conversation. What I care about is understanding the person, right? I don't even care about the business. The first 30 minutes of my call with the founder, it's like, who are you? But tell me about your upbringing.
Yeah.
Like, how many siblings do you have? What did you do? What did you want to be when you were growing up? Like, and that's how everyone wants to be seen. Everyone wants to be heard, right? And I think once you go through that journey with anybody, you're connected.
Yeah.
Trust is being established.
Yeah.
And then you're genuine. Like you really want what's best for them. And they see through that. It's not, hey man, show me your plan, what's your go-to-market, blah, blah, blah. That happens later. And I think at the stage I'm at, it's really the person. There's not much traction to back. So I have to spend time really believing in their story and if they are coachable, if they are really intimately understanding the problem. And that's the second part of the sort of the analysis or the questioning, you know.
It's
But founders love the fact that you want to connect with them, because they're human beings like
yeah,
everyone else.
absolutely.
And I think most of the time, this is what I get we overcomplicate. Like, we're really dealing with humans. It's an investor founder. These roles that we have to play are kind of bullshit. Sorry, made up, kind of, by history, right? But it's
Yeah.
really, I'm a human, and on my journey of life, you're human, and I'm just gonna be with you and connect with you because I believe in your journey and you and your capabilities, and that's where the authenticity and connection comes. And then when you have that with a founder, it's especially early on, it just compounds. It becomes much more powerful for them and you.
It's a game of trust at the end of the day, right?
Yeah.
At the end of the day, once you can establish that trust, everything is seamless after. Everything's
Yeah.
way easier, right? Over the weekend, there's a founder in the Middle East who tweeted out something, and I found it really, really interesting. I don't know if you saw it. She wrote, pitch decks are a total waste of time. I don't know if you saw this, and it went crazy, and then it trended globally, and then you had VCs in the US and Europe. You had a lot of people tuning in, founders supporting her, etc. But her tweet was something along the lines of, pitch decks are completely bullshit. You've been lied to. Everyone tells you that you have to do this, then that, and this and that, and show this, and have this piece in it. And anyway, basically her message was, fundamentally, at the end of the day, all deals between VCs and startups are done on the back of a napkin or otherwise based on a relationship of trust. And the complexity of a pitch deck or all those hoops that you have to jump through are actually useless, right? And I don't know if I agree or disagree. I think the process of creating a pitch deck is a very constructive process, I think, for a founder, because you have to really think about
Exactly.
what you want to present, what you want to say, how you're going to package everything. And, it makes you structure everything properly. And I think the process is extremely valuable. But at the same time, I also agree with the underlying message, which is a pitch deck is just one of the elements that will be evaluated. And fundamentally, the relationship between a VC and a founder trumps anything, right? And it's just so funny because the reaction of that, all the responses and reactions of that tweet, you would see the two sides of kind of the coin. There was the VC hardcore, no, you have to structure it, you have to answer these questions. If you can't answer these questions and you can't answer it in a succinct way, then it's very difficult for us to even think about investing in your business. And then you have the founder who says, yeah, but I don't have all these answers. I can make up answers and I can put them on the slide and make them look sexy for you. But fundamentally, that's not what you're investing in. I'm super early stage. Like, these things will develop over time. These things don't matter, right? And so for me, I realized, and this was the conversation I was having with Steve again, was the relationship between VCs or investors and founders starts off on a very difficult foot, right? And, the founder wants to get the capital at the minimal cost to them, and the investor wants to invest capital with the biggest potential win at the end of the day. So fundamentally, the relationship is based on kind of a conflict of interest, right? It's like, yes, I need the money to scale my business and I need it to kind of build my company and my brand, but I don't want to give my ultimate objective at the end of the day is to give the minimum that I can to get what I need. Whereas the investor wants exactly the opposite. And it's just, I wonder how you think about that as an investor. And obviously, your ethos and your values, point in one direction, but fundamentally you also have to promise a return to your LPs or your investors. So how do you manage that dynamic between the two things?
Yeah, that's okay.
It's a big question.
Look, I think I don't have a hard and fast rule, but I'll tell you, I think my job is to be somewhat disciplined. So, for example, there's some crazy valuations in the past 12 months. You can get caught up in it.
Yeah.
And I don't care too much about valuation. So the idea of ownership, when I hear VCs saying we have a target ownership, it's important to have a target ownership, but making it adamant that I need to get that percentage or I want to invest, I think is a hard thing. I don't agree with that philosophy. I think outliers. So if I tell you like I can predict the outcome of a business, I'm delusional, right? Like there's no way as an investor I can. And what typically happens with outliers is they always exceed any expectation you have. So even if I had a target ownership and this ends up being the one that hits it out the park, even at half the ownership, I should be doing amazing.
Yeah.
And I think that's the philosophy that I approach it. Like I'm disciplined in cases where I think that the founder needs to be reasonable, like valuation-ish.
Yeah.
But I'm somewhat loose to the outcome because I think the outliers will always be like magnitudes bigger than the difference, the minute difference that I'm negotiating right now. So I don't know if that defines it, but that's the philosophy I take.
So it's the belief that if I'm going to make a bet, if I'm going to invest in a company, I have to assume that each and every one of them has the possibility to be a home run and far exceed any expectation. And with that principle, then whether I have X% or X% doesn't really matter.
Yeah, but each of the founders that I back have the potential to build something.
Sorry,
cool.
yes.
Yeah. So it's people focused, and I'm not gonna. I mean, there is a range. I'm not saying I'm gonna be, totally loose, but there is a discipline around that. Like I said, valuations that are pre-seed that are just extreme. I won't deal with that because I see the founder. It's probably not someone that I think is making choices that are in the best interest of the long-term value creation. They're really optimizing for the current transaction, not for the long term. And I think there is a balance between both sides that you can achieve if you have trust and if there is openness in the connection. But I've seen it with Cream. Like we never thought when we invested that it would be a $3 billion company. There's no chance we thought that. Maybe $500 million, not $1 billion.
Yeah.
Right. We own low single digit percentage, but we made our fund with that investment.
Yeah.
Right. And I think at the time, that's definitely not what we projected out. When we invested in Property Finder, which was in 2013, when the VC ecosystem was crazy, we invested at a $15 million valuation pre-money. And we were, nervous as hell. I don't want to say, Danny and I were just like, what are we doing? 15 million is crazy. Like, and now the company is worth north of $500 million. It wasn't something we predicted, right?
Yeah.
And we thought it would be a success story. Of course, we believe in the company, but and it's going to be worth much more than $500 million. Going forward, it's closer to $1 billion and so forth, right?
Yeah.
Which is just far bigger than we ever anticipated.
And so, okay, so how do you find founders? How do you connect with founders? Is it opportunistic? Is it kind of the product of your values naturally attracts people, or do you have a process? Like, how do you find founders?
Look, it's network. I think it's founder network. Typically, founders know other founders, and nurturing that network is something I'm trying to do continuously. And now we have 10 companies that we invested in. Those 10, without speaking on their behalf, we have a really good connection with. So if founders talk to them, they'll then refer. And my past life with Beko, we had 36 companies. So those founders know me. And so they refer. So it's just building those connections. And then obviously my team, they also are in the ecosystem currently in the ecosystem as employed people. I have some venture partners that I work with. So they all have networks.
But it's opportunistic relationship wise. There's no like funnel system that you've created. You haven't created any.
Not yet. I mean, we have ideas.
Sure.
I think, I'm not in a hurry, but yeah, we have ideas on how to kind of think about creating, well, I don't want to talk too ahead of myself, but like some cohort based, program that can funnel in.
Because it would be,
founders.
because it would be great to give people some sort of access, right? Where if I don't have a relationship with other founders or established kind of people in the network.
But that's the thing. So my view there is that the right founder, the one who's really going to build something great, is going to hustle his way to find you. He will find a connection to you. I don't look at like I not to speak. I don't like receiving cold
Cold
LinkedIn
emails,
messages that
yeah.
have been copy pasted and sent to hundreds of other
Yeah,
investors.
nobody does.
Nobody, yeah, but that's the majority of the
Yeah.
people that are the ones you're talking about who
Yeah.
can't find you and then want to get in touch with you. So
Yeah,
that's not the type of
it's like a natural filtration process anyway.
yeah,
so
it's
good.
not, and so the guy who can hustle to get to, let's say, Chris, and then Chris says, "Hey, Amir, there's this cool
Speak to
company.
this
I'm
guy.
like, okay, I want to listen to what Chris is talking about. I want to meet this guy." And that guy is resourceful enough to build trust in you because you wouldn't just send anybody. You're going to vet those introductions.
Yeah, really interesting. I think when we look around us now today and we look at all the entrepreneurs, look at all the founders, all the things that are being built, it's really, really exciting to see. And I think there's just endless amount of founders that need to have a coach in their corner. I think it's like a real problem. The amount of founders and builders that we speak to on a day-to-day basis, even as DUCKLIFE as an organization, that are trying to solve some problems that are just so fundamental. And if they only had access to people with a bit of experience, a bit of knowledge, a bit of know-how, it would help them tremendously.
Yeah.
How do you go ahead? Sorry,
please.
No, how do you kind of how do you treat founders that are sole founders or that have co-founders? Like, how do you manage that? Because, for example, there are many companies that have a team of co-founders. There are some companies that are solo founders, etc. And that loneliness, that bouncing board, is often between co-founders, or if they're alone, it's a very different dynamic. Have you, in your experience in investing in companies, when you compare companies that are co-founded by a couple people or a bunch of people versus a founder alone, does your proposition kind of I would say become more powerful for solo founders? Is it something that
Great
you find?
question.
Yeah.
Great question. Maybe I'll start with, so I started this with a guy called Yusuf Sabr. He's ex Kareem, head of data, built a data science team at Kareem. Also started 3 companies. One he got a decent exit with, and then now he's at Delivery Hero building the data science team there. So Yusuf and I have known each other for years, since his Kareem days, and then today we've been working together on this stuff. But the reason I'm bringing him up is I've seen him interact with founders across. He's an engineer, data scientist. He's one of the best and brightest brains I've come across in my years of investing, but someone who's also very values aligned with me. Same ethos, same culture. Like, you touch me or Yusuf, like you connect with us, you're connecting, you have the same, experience. But his depth is on product technology and data. Not much in the VC world today in our region has that level of insight. Yeah. And so when a founder, either solo or co-founder, who's a technical guy, spends time with Yusuf, just one session, solo founders typically need access to vetting tech talent, thinking about product roadmap, what decisions to make. You spend the session with him, he's going to give you in that 1 hour 2 or 3 decisions or insights that will make that decision far better for you and accelerate the outcome of success drastically, just from that interaction. And for me, I spend time strategy, fundraising, and culture building because that's my experience. And so we build, just the 2 of us, this wide and deep set of insights and experiences that we can give to solo founders, let alone teams. And typically, if I look at my past successes, Kareem was co-founders, obviously, which was great. Property Finder was a solo founder. Selling Car was a solo founder. And sometimes I think there's no preference. I think we are generally, and we should be giving more value to the solo founder because they're alone and they don't have enough resources. But I would say that there are benefits to both. So when we look at solo founders, it's fast decision making, right? You don't have to talk to anybody; they'll do it tomorrow. With teams, it's like getting some sort of consensus, and that takes a bit of time, slows down the process a little bit. And obviously, some of the biggest reasons of failure in companies is co-founder conflict, right? You find that happening later on in some companies, and you avoid that as a solo founder a little bit, right? So those are some of the things that we think about.
Is your hypothesis at COTU that by following this ethos that the success rate will be higher? is that how you position yourself, at least from a LP perspective as well? Is that the
Yeah.
positioning?
The positioning is the region has hit a critical mass in terms of talent density. Kareem was the catalyst, and now you have Swivel, Katopi, Maksab, Uniphonic, Tabi, all going to churn out future entrepreneurs. And it's so growing, compounding so fast that nobody can really, no one fund can cover everything that's coming out. But, and so entrepreneurs are coming out far more ambitious than ever before. The way we position ourselves is, so that's our underlying thesis of why to invest first check, because the quality and capabilities of founders have never been better.
Yeah.
And for us, our job, we see it as how do we augment critical decisions in the life of a founder by asking the right questions, by giving some insights, by giving them access to certain people. And so we think that if we can take our experience and insights, sometimes systemize it, but generally give it to a founder, we can increase the time to success faster success rate, less mistakes, and just generally bigger outcomes, because we can help them hire better, we can help them do many things. Those are the critical decisions early on. And if they do that right, the foundation can really get you to build something that really compounds, right? And if you think about Kareem, the same thing. They got the right foundation. Culture was really big early on. And then you look at other successes like, Katopi and Swivel, even the same thing. So, yeah, I mean, that's our thesis. I don't know. It's really like a lot of it is like 95, I'd say 98% is on the founder. If we can make that 2% really hit, it's really compound.
No, but it's super logical, right? If you think about it, if you break it down, it's super logical. It's unique in its proposition, but it's super logical in its approach, right? It's like we will identify founders, we will build a relationship with them of trust. So the transfer of knowledge, the types of conversations that we have will be constructive both to the person and to the brand or the business. The inherent result of that is more confidence, faster decision making, and
better decision making
and faster decision making, which ultimately leads to better everything, right? So leading a business successfully is predominantly the ability to make good decisions more often.
Mm-hmm.
And so if you feed that and you serve that purpose, then fundamentally, logically, the business and the startup and the human being is going to do better.
Yeah.
So what you're saying, even though it sounds head in the clouds, philosophical and stuff, it's super logical.
Yeah.
It's super logical, right? No, but I mean like on the surface, it's because when you say like to champion an underdog, and it sounds extremely emotional, but it's absolutely logical. It's not. It's a very rational thing. It's based on fundamentals of emotion and fundamentals of values and culture and stuff.
Yeah.
But it's the application of it that is super logical, right?
Yeah.
It's like, if I'm more confident as a human being because I've had stronger relationships with my investors, I can have more honest conversations. We can problem solve together, leverage their experience, not just mine. Then inherently my decisions will be more positive or more successful, and I'll be able to make them quicker.
Yeah. Yeah, I mean, for sure.
So the concept isn't that.
No, but it doesn't exist.
But it doesn't exist. But I totally agree. I mean, the concept is super simple, and it's super, super logical and rational. So it's more of a kudos to you.
Yeah.
But it's exciting. I mean,
the thesis plays out in the feedback loop with founders. So the challenge with venture takes time to figure out if you're making the right choices. Okay, Becca was a 9.5-year journey. We made some great choices. At the time, we were learning. This time around, I believe in this thesis. Like, it's like much more values driven, much more focused, that like the feedback loop is hopefully going to be positive, and it's happening now. Like, I can see 2 of our companies are going to go raise big rounds at good valuations, and they have, healthy business traction, and great teams. And the feedback loop they're giving to us is wanting us to be more vested. There's a lot more you can sense that, okay, you're playing a massive role in their journey, at least as big a role as an investor can play, right? Because I really believe it's a founder.
No, absolutely.
Journey.
I'm also wondering, like, so that resonates really well with founders. I think what your the way you're approaching it makes total sense for founders, and I think it resonates heavily. But how is it on the other side of the table with other investors, with your LPs? Like, is it something that you're finding that's also like people are ready to hear, are ready to invest in that kind of ethos?
Yeah.
Is it
I mean,
is it also like resonating on that side?
I mean, I'd say the LP universe is still less sophisticated, but growing. Um, People that know my track are backing me, less so the mission that we're on,
Okay.
because we have barely started, right?
Yeah.
This is all me telling you what we're doing in the past 12, 18 months, not a reflection of what we want to be, but we're on a path to something. And I think some people were backing us now are backing our reputation and credibility. And then just like, angel investor kind of concepts, where
Sure.
they just back them. And then when we build traction, we actually have a, credible brand, reputation, systems that actually do a lot more of this. And I think then more LPs will believe in this philosophy. But that's a shift that we have to spend time educating them, right? It's hard to explain what building trust means to an LP and how that means higher returns on investment.
Because they're not as exposed to the building of their investments, right? So they're making a bet on Amir to make the right decisions, but there's a layer between them and the founder themselves, and so they don't get exposed to that as well. So I guess explaining that reality doesn't come as easily as it would.
Yeah, they're returns focused, which is not a problem, right? It's like the idea is that we should. My thesis is by being a champion on that, by following this ethos, this approach, we'll get better returns. That's ultimately it, right? And I think for them, they're much more focused on the outcome, less so on let's say the process so much right now. And I think as we build more successes, it's a virtuous cycle. I think what will happen is more founders will be investing in the ecosystem and they'll be looking for this ethos, right? Because they're founders focused. They've been founders for the most part today. It's all families and institutions.
Yeah. When it comes to success rates in the region, so you look at like the Gulf and you look at the Middle East in general, I mean, depending on how you define success, but when it comes to success rates of startups, I mean, like you said, like, valuations are all-time highs, almost, you're seeing people land, funds and investing much more kind of than you would in the past. Are you expecting success rates in general to kind of drop? I think a lot of people seem to be waiting for catastrophic failures to happen. It feels like there's been a very big high and a nice big boom, but generally everyone kind of feels like, okay, we're about to see, a lot more failures than we had in the past. One, because it's a numbers game. There's a lot more startups, a lot more investments happening anyway. So you're going to start hearing more about it just from a volume perspective. But do you think success rates are also going to suffer?
No, good question. I mean, look, I think it's a latter point on the volume. A lot more startups exist, so there'll be a lot more noise around that. I think the best companies will survive, the ones that are actually creating value, that have, real fundamentally good economics behind the business, good teams, and that are executing well. They'll get backed and they'll succeed. The ones that are riding hype, which has been the case in some specific sectors, they may not be able to survive. But I do believe in an more M&A activity happening than ever before in the case where companies don't actually make it. I think acqui-hiring is going to be an interesting space to enter new markets. I think smaller acquisitions, 10, 20, $30 million, ones are going to happen more often, but people don't see that yet. They're just focused on the outliers. And that's when you actually start seeing an ecosystem emerging. And I think it's going to happen. It's already happening, but people don't hear it so much, to enter new markets. There have been companies that have bought companies in Pakistan, companies that have bought some in Jordan, for example, recently, POS Rocket.
I also don't think it's bad that, fundamentally, I personally, my view is I don't mind success rates going down. I don't see that as the ultimate metric of success as a region for an ecosystem, because, one thing that we've lacked as a region is being able to attract, retain, and develop talent.
Yeah.
and failure is a great aspect of development. And so even if we have 500 startups that are funded and 500 fail, you have 500 different companies with all their staff and all their teams with immense learnings, right? And so I fundamentally don't see that as a negative. I see it as a positive in terms of the development of an ecosystem, right? It's just we need to learn, we need to fail, we need to screw up in order to learn, right? And even in the most successful startups, even at Kareem, like we screwed up a lot of things.
Yeah.
But those learnings are extremely valuable, right? And that's what allows that Kareem ecosystem also to thrive maybe more than another one, right? And so
Yeah.
to me, the narrative of, yeah, we're going to have huge catastrophes and huge failures and stuff. Yeah, but so what? I generally think it's good. And on that front, I wanted to ask you, what's the difference between a first-time founder and a second-time founder, especially if they failed?
First time founder, second time founder. Look, I think so. There's an interesting statistic. Okay, I think it's from a book called Super Founders. That was published, I think, a year and a half ago. Really interesting on the data on founders. They found that second-time founders with a mediocre success in their first journey,
Okay.
or you want to call it, not even I guess failure has its own definition, but let's say mediocre success, end up building the biggest outcomes. So you take Travis Kalanick at Uber,
Yeah.
right? His company before Uber was like a relatively, in the US terms, like not a huge success. And then he built Uber, right? So I think once you go through the first journey, no matter the outcome, I think it teaches you a lot about first the journey of being a founder and what it takes to succeed. And then if you're someone who's curious and open-minded, you're going to learn from that experience and do it faster, better, and even more ambitious, right? There is a couple of founders that I've come across, like in let's say the payment space. So I know a founder in the US, but he started a payments company. It got acquired for let's say not a great outcome, but acqui-hired. His next company he built, and he focused on not going after really thin margin businesses, and he learned a lot about the type of models he wants to tackle, and so that learning allowed him to build something even more successful than the last one. So I feel like there's so many
there's more benefit to having been there before and learn, I guess.
Yeah, it's just more credibility, more track record. I think it just you're as long as the founder is a curious founder, because sometimes someone leaves after a failure with a lot more baggage, which doesn't let them do their second journey even to the best of their abilities, if that makes sense.
Amir, we've been talking for 50 minutes.
Yeah.
I feel like we could talk for like 3 hours.
Yeah.
I'd just like to kind of maybe end on a question where I'd love to get your view of the future a little bit. You've been an investor for 10 years. The world around you has changed completely. The ambition of the region, the capability of the region has completely changed. Where do you see us in 10 years?
Wow.
As a region?
Yeah, I don't plan that far ahead at all, man. Although my fund is a 10-year fund, so I have to. Look, I think whatever I thought when I first started that, so I've been investing. So I started it, well, not to go back, but 2008, I moved back and I worked with Walid Hanna. We set up the first seed fund in the region.
Yeah.
Way too early. Okay. Zero, deal flow, made 6 investments that weren't successful at all. But I'm bringing that up because I think if I looked when I started Beko in 2011, 12, there's no way I would have predicted this happening. Right.
Yeah.
So if I tell you what I think it's going to look like, it's like 10x. I tell people, even my LPs, I say, listen, you're going to invest. I can tell you that, the region's going to look like this in 3, but whatever I'm going to tell you, multiply that by 10, because it's not even going to be a fraction of what I can even imagine it is. But I would say that, Saudi, Egypt, UAE are going to be building really healthy ecosystems. I think UAE is going to be a really amazing focal point for global technology companies, not regional anymore. And I think Saudi is going to build for Saudi, and that's going to be really healthy because they're going to build really massive companies that are going to play massive roles in public markets and other things that can really catalyze that economy. And then Egypt's just going to be an amazing talent hub. More ambitious founders are going to come out of there. They're going to build for Africa. They're going to build for other emerging markets at such a scale that they'll warrant, like, their own dedicated funds and their own dedicated, like, ecosystems on their own right. It's no longer going to be MENA. It's going to be like each country.
Yeah.
That's how I can see it evolving. Yeah, I don't know, man. I'll be close to 50 by then. So.
All right, man. I mean, that's a good outlook on the future.
Yeah.
Again, thanks for making it. Really appreciate the time.
This was good, man.
Hopefully
Thanks.
we'll do it in a year or two, see what's happened.
Yeah.
We'll do a recap. We'll do a part 2.
Yeah.
Thanks, Amir.
Can't wait to see that. But thanks a lot, Chris.
Thanks, man.
All right, man.